The 5 assets that tend to hold their value the longest are typically those that are seen as relatively stable and resistant to inflation, economic fluctuations, or changes in market sentiment. These include gold. 1. History as a store of value. Gold has been a symbol of wealth for thousands of years. 1. Ancient civilizations used it as currency, and it was the backbone of the global financial system until the 20th century when the gold standard was abolished. 2. Why it holds value. Gold is durable, easily tradable, and rare. 2. Its scarcity means it has intrinsic value, and it doesn't corrode or degrade over time. 2. In times of economic or political uncertainty, gold is often seen as a safe haven investment. 3. Inflation hedge. Gold tends to rise in value when inflation is high or when paper currencies lose their purchasing power, making it a key hedge against inflation. 4. Challenges. While gold is generally seen as a stable investment, its price can fluctuate based on global demand, interest rates, and market sentiment. 4. Over short periods, it can be volatile, but historically, it has maintained its purchasing power over long periods. Real estate. 1. Tangible and scarce. Land, especially in high-demand urban areas, tends to appreciate over time due to its finite nature. 1. As populations grow and demand for living and working spaces increases, property values generally rise. 2. Income generation. Real estate provides the dual benefit of potential capital appreciation and the ability to generate rental income. 2. This makes it an attractive long-term investment, as it can provide both immediate cash flow and wealth growth. 3. Hedge against inflation. Real estate is often seen as an effective hedge against inflation because the value of property and rents tend to rise along with inflation. 3. This makes it a good choice for preserving wealth over time. 4. Diversification and stability. Real estate can be diversified through various types of property, residential, commercial, industrial, and geographic locations. 4. While the real estate market can have cycles, it's generally considered a stable long-term asset. Fine art. 1. Cultural and emotional value. Fine art has a deep cultural significance and can offer more than just financial value. It represents creativity, history, and craftsmanship. 1. This cultural importance helps to preserve and even increase its value over time. 2. Rarity and provenance. Works by renowned artists, e.g., Picasso, Van Gogh, or Da Vinci, are incredibly rare, and their historical provenance adds to their desirability. 2. The rarity of the artist's work, combined with its cultural value, drives long-term appreciation. 3. Wealth preservation. Collectors and investors often view fine art as an alternative asset class that can outperform traditional investments. 3. Art prices have historically outpaced inflation, and high-quality pieces can appreciate significantly over time. 4. Volatility. The art market can be less liquid and more subjective than other investments. 4. Prices can be influenced by factors like auction results, changing tastes, and economic conditions. 4. However, the most prestigious pieces have consistently seen growth over the long term. Antiques and collectibles. 1. Tangible and unique. Antiques, rare coins, vintage watches, classic cars, rare books, and other collectibles hold value because they are tangible, unique, and often tied to historical periods or cultural moments. 1. Collectibles are often scarce or produced in limited quantities, making them desirable over time. 2. Passion and emotional investment. Collecting items is often a passion, and many people hold onto rare items for personal enjoyment rather than just financial gain. 2. This emotional connection can make these items more valuable in the long run. 3. Appreciation in value. Many antiques and collectibles increase in value as they become rarer and more desirable. 3. For example, vintage cars and rare coins can see significant price increases over decades. 3. Some collectibles, e.g., comic books, sports memorabilia, have been known to outperform stocks in certain periods. 4. Market factors. The value of antiques and collectibles is influenced by market trends, demand, and the condition of the items. 4. Unlike stocks or bonds, these assets are not subject to regular dividends or interest, but can still appreciate over time. Precious metals, other than gold. 1. Silver. Silver has been used for currency, jewelry, and industrial purposes. 1. Like gold, it is a tangible asset that retains value due to its rarity and physical properties. 1. Silver is often viewed as a more accessible alternative to gold because it's less expensive per ounce. 1. It can be a good store of value and is considered a hedge against inflation, although it tends to be more volatile than gold. 2. Platinum and palladium. These metals are rarer than gold and have industrial uses, particularly in automotive manufacturing, catalysts in car engines, and electronics. 2. Their industrial demand means that they can hold value even during economic growth periods. 2. Both metals are rarer than gold, which often leads to price increases over time. 3. Investment appeal. Like gold, these precious metals are often seen as safe haven assets during times of economic or geopolitical instability. 3. Their value is tied to scarcity, market demand, and industrial uses. 4. Volatility. While precious metals generally retain their value, their prices can be volatile. 4. They are also affected by factors such as supply and demand, mining production levels, and shifts in industrial usage. Why these assets hold their value long term. 1. Scarcity. All 5 assets, gold, real estate, fine art, antiques, and precious metals, are limited in supply. 1. Scarcity is a key factor in maintaining and increasing the value of these assets. 2. Durability. These assets are typically durable and can withstand wear and tear over time. 2. Real estate doesn't decay, unless poorly maintained, gold doesn't corrode, and antiques and fine art can survive for centuries if preserved properly. 3. Historical significance. These assets have been valued for centuries, and their long-standing appreciation has built trust among investors and collectors. 3. This historical precedent often gives them an edge in maintaining their value. 4. Cultural and emotional value. Items like fine art and antiques are often tied to cultural and historical significance, which drives demand. 4. Even in difficult economic times, their value can hold because of their uniqueness and connection to history. 5. Inflation resistance. These assets are seen as reliable hedges against inflation. 5. As currencies lose purchasing power over time, tangible assets like property, gold, and fine art retain or increase their value, making them attractive for wealth preservation. Each of these assets offers unique advantages and considerations, but all have a history of maintaining or increasing their value over the long term. Investing in these assets often requires careful selection, knowledge, and sometimes patience, but their potential for long-term wealth preservation is well established.